Greetings. Welcome to my weekend market recap 19th February 2022. I am traveling. I have set up in the hotel. I hope you can hear me. If there is no sound or any issue, please let me know using the chat panel. I'll continue. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I developed. I just yesterday released the Q global systems on Metastock 18, the latest version of Metastock. I'll use that latest version today, and I will try to highlight some of the user-friendly changes that are included in Metastock 18. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. All these are open to the public. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. Q systems run as add-ons to the Metastock and TradeStation platforms. These are the only systems I use in my trading. And that was the last slide. Let's continue with a look at the global system. First, a look at the Australian market, global markets. First, starting with Australian market with the index AX, not AXJO. I keep on talking about AXJO. You could use AXJO also, but I am plotting here all ordinaries. All ordinaries recovered from far below the lower boundary. It crossed the lower boundary at this point, and it also crossed the watermark support at the same point. So the sideways move was broken from here onward. Fell sharply, displayed the bull release signal, then recovered to the yellow direction line, multiple trend line resistances, displayed indecision at the top, bearish signal, and then bear release signal in the next candle. After that, it moved sideways for a few days. Friday's candle has red color. Weekly candle has bearish shape but yellow neutral color. It is in a downtrend. Price recovered the value area and then tilted down. This is the time to look for shorting opportunities in individual stocks. All ordinaries is not giving a bearish setup yet because the weekly daily checklists of none of the trade setups are getting confirmed, but individual stocks may give short setup as of Friday's close, and those will likely be low risk opportunities because the market index itself is very close to trendline resistance. Stop would be just above the recent high for the all ordinaries. In downtrend and in a position where short trades are more attractive. Japan's market topics index. In the last webinar also I showed Japan and Australia indices where we see the same thing this week also. Topics also recovered after displaying a bull release. At the top, it displayed bearish indecision, then bear release, then moved somehow to trend line resistance and now tilted down. Topics is also in a downtrend and preferred trading direction is downward. Topics does not have a short setup yet, but individual stocks will likely have short setups as of Friday's close. China CSI 300. One thing you will notice that with Q on Metastock 18, the charts are more sleek and there are certain user-friendly characteristics, like if you want to expand the weekly chart, let's say we have this empty space between two trend line supports. This support is not broken, so we may not want to see the next support, especially when I am sharing ideas on the forum, my website sagarnandy.com. I would not like to show this trend line also. I just want to show this trend line. So now it is even smoother to do. You see, I am clicking on the y-axis. It is changing to an up down arrow and I just drag it down. Very smooth, very nicely. I can focus on only the immediate trend line support. And if I want to go back to the full axis, I may right click and choose rescale y-axis. This y-axis resizing is very smooth and probably the best I have seen in any platform, including TradeStation. It's even smoother and better than TradeStation now. Coming back to CSI 300, in daily, CSI 300 also broke below lower boundary and below the watermark support somewhere here. Then for last couple of weeks, it's moved sideways. We may see from the weekly, for last 3 weeks, the closing prices are very close to each other. It has weekly support nearby, had a bullish indecision 1 week ago, bull release this week. In daily, we have a trendline support, bullish headwind, bullish color on Friday, bullish shape on Friday. So unlike Australia and Japan markets, Chinese market is bullish as of Friday's close. If I am looking for a trade setup in CSI 300 China market, I will probably look for the setup in the long direction, not in the short direction. Overall, of course, CSI 300 is also in a downtrend, and that is the beauty of the Q systems. Though it is still in a downtrend, looking at the very long term weekly support and looking at the bullish headwind and the bullish close on Friday with bullish reversal at price extreme low, I am able to decide my preferred trading direction to be long, not short in CSI 300, though it is still in a downtrend. That's the advantage of Q analysis. We are able to have low risk opportunities even in a down market in bullish direction. Downtrending by preferred trading direction is long. And UK's Footsie index, in the previous recap I showed it was in an uptrend and that is continuing. Previous week closed with a bullish shape and I mentioned that Footsie itself was significant distance away from recent swing low, so Q techniques would not allow us to buy Footsie itself. However, I said that because the weekly closed bullishly, we could look for long setups in individual stocks. The Footsie has pulled back this way. However, the trend line support and the yellow direction line, they are still holding. In the weekly, we have a bearish headwind, bearish backdrop color. That is a reason for concern. However, weekly also has a trend line support. Unless those supports in weekly and daily are broken, and it seems daily will find it difficult to break through all the trend lines. There are many, one after another. So it will not be easy to find shorting opportunities in Footsie that are low risk. It is still uptrending. Currently, there is no trade setup. Preferred trading direction, indecisive. And lastly, India's Nifty 50. It was moving sideways, and that is continuing. Price is bound by trendline resistance and support in both weekly and daily. If you remember, in the last market recap, I mentioned that if price came to the daily trendline support, at which point it would also come to the weekly trendline support, we could look to buy. Following that preparation, we could buy right on this day using intraday fine-tune chart when price bounced up from the watermark pivot support with a bull release signal. We could use intraday fine-tune chart to take the long trade in Nifty itself, maybe using futures or in individual stocks. And we would book profit when price came to the yellow direction line, which was also the value area. Risk distance was certainly covered because our entry would be using fine-tune chart somewhere here. Stop would be just below the trend line support. Risk distance would be very narrow, and we had much more reward than the risk, and we would not take risk of holding the trade over the weekend. Why? Because it is reversing from trendline resistance. We would have a profitable trade using fine-tuned chart with preparation beforehand that we would buy when price came to trendline support and if it started to go up from there. And now we don't have any low risk trading opportunity. Weekly has support very nearby. We are not able to short, and daily has trendline resistance very close. We are not able to buy. Moving sideways, and there is no preferred trading direction. If we wanted to know how is the overall global market, we could use the global index, custom index in Q global market breadth. But along the way, I will also show the differences in Metastock 18. Earlier, if we had many charts open, we went to File, Close All, and keep the N button on the keyboard pressed, or press no multiple times if we had many charts open. Now we just have to press no once. To demonstrate that, just do it here. One time it is closed. Even if we had 10 charts open, we only need to go to File. Okay, nothing is open now. Let's open something. Global index, custom index. I tweeted also last week that global index is not bearish, unlike the USA custom index. Global index is moving sideways, and interestingly, this global index, excluding North America's, is very similar to India market. Though it is not India market, it is comprised of Japan, Australia, China, UK, India, 5 markets. But it is looking very similar to India market very close to trend line resistance in daily, not able to buy, and there is a trend line support nearby, not able to short in a narrow range sideways. How is the USA market? Let's look at the market ETFs and then we look at the market internals. Now intentionally I am not going to close this chart, let it be there, and I am going to open the at a glance template of QQQ. I have everything set up on my custom menu bar. In the previous market recap last weekend, I clearly mentioned that for the USA market, the preferred direction was bearish direction, and that was very useful. In the weekly, we can see this is for QQQ, Nasdaq ETF. Price fell down with bearish shape, bearish color, and now if we look back, once the backdrop color changed to bearish, it has remained bearish for 1, 2, 3, 4, 5, 6, 7 weeks now. So when backdrop color turned bearish in weekly, we could look to short the lower highs with magenta color in the daily. Technically, those were go with flow or flow short setups. If we didn't take the short in QQQ itself, we could look for shorting individual stocks right on this day and again on this day. And those should be profitable by now. Why I might not short QQQ itself, for example, on this day, was because there was a watermark support nearby. However, weekly backdrop was bearish and daily had lower high and a bearish flow color in daily, so we could look for shorting opportunities in individual fundamentally weak stocks. So last week's bearish preferred direction worked out very well. QQQ fell down. On Thursday, it gave a bearish flow in daily. Friday, price closed lower, but it has a lower tail. So on Friday's close, we were not going to short QQQ. We could have shorted on Thursday, or we could have shorted even before that on this day itself. It is bearish. Preferred direction is bearish, but not in QQQ. It has already dropped since the first magenta color candle came here. Notice that in weekly, price closed below previous week's low. That is why the activity bar color here is bright red, not dark red. Bright red activity color means price closed below previous week's low. Dark red would mean price closed below previous week's close. So QQQ is looking weak in both weekly daily. SPY also weak in weekly and daily. Again, daily has a lower tail on Friday, so you don't short at the close on Friday. Another reason not to short on Friday at the close would be because price is very close to the white direction line that may act as support. So you don't like to short at the close on Friday, but it is bearish. Now in the previous recap, I mentioned that I would rather short QQQ or SPY, not DIA or IWM. That was 1 week ago, and see DIA. It came down, but I didn't want to short DIA because of the trend line support in weekly, and that is still holding. It's not decisively broken. Once again, Friday's candle has a lower tail, so you don't short on Friday's close. Anyway, DIA was not the preferred market ETF to short, as I explained in the previous week's recap itself. Same was true for IWM. Here you see the weekly color is not even bearish, and price did not close below previous week's low. Red but dark red, meaning it closed below previous week's close but not below previous week's low. Once again, the bullish headwind in the daily caught the perfect bottom. That was the time to trade IWM, probably using short put vertical. Somewhere here it came and then reversed from the trendline resistance after displaying bearish indecision. So we would stop thinking of taking longs here. We would book profit in the longs that we initiated looking at the bullish headwind. Now IWM is also tilting down, not as weak as QQQ SPY because the weekly backdrop color is not bearish, but still it is tilting down, lower high, lower low. It's in downtrend. Preferred trading direction is bearish. So all the market ETFs are showing weakness. Market is bearish. The same view that I had in the previous week. And now see, I had the total view open earlier, not total view, the global index. You can see that I moved the weekly chart, and now weekly daily at a glance. I am going to file, close all. I have to click no only once. Everything is gone. Earlier we had to keep the N button, N for no, button on keyboard pressed or click no multiple times. That's an usability improvement. Now let's look at the market breadth total view. Market breadth total view is displaying Eureka, 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 that is the cyan color candle. Eurekas are days when the market bulls are, then it is also displaying Phoenix, 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 Phoenix. Those are the days when bears are firmly in control. So we have Eurekas, we have Phoenix also. These are market breadth indicators coloring the candles. When Eureka Phoenix come together like this, it is volatile market, safer to stand aside. At the same time, just now we saw we have 3 Eurekas from here, but 1, 2, 3, 4, 5, 6 Phoenix. So Phoenix are twice the number of Eurekas. That is also showing that bears are controlling the market overall. If at all we wanted to trade, the preferred trading direction would be bearish. Friday, again a Phoenix came. Now this market breadth total view is created from the 2 composites and 4 major indices. If we see the percentage of stocks above 50 MA, that is a study I look at regularly. It is gradually coming down with lower high, lower low. That is also showing that the market is weak. Market breadth total view. If we wanted to know Nasdaq or NYSE, which one is weaker, from previous recaps we know that Nasdaq was weaker for many weeks and months. Let's look at that this week again. Nasdaq and NYSE market breadth. Now if you look at the Eureka and Phoenixes, Nasdaq had the Phoenix on Friday, Thursday, not NYSE. Nasdaq was and is more volatile and more bearish, the exact comment that I made in the previous recap as well. And if we wanted to look at the major indices, you will see that not only Nasdaq as a whole, as seen here, but Nasdaq 100 is also relatively weaker. So now I am okay. This is one thing. Whenever a new software is released, whether for TradeStation or MetaStock or any desktop-based platform, it is not unusual that the platform crashes in the beginning with so many developmental changes, and that seems to be happening for me also on Metastock 18, but I'm sure they will fix it. Let's look at the major indices market breadth. Here we have Dow Jones Industrials, Russell 2000, Nasdaq 100, S&P 1500, S&P 500. Notice a few things, and I tweeted about some of these in previous week. Notice which of these major indices has these frequent changes in accumulation and distribution count. That is Nasdaq 100. Accumulation distribution count keeps on changing. Red are distribution counts. Of course, count will be one for one major index. So distribution days, accumulation days, alternating, very volatile. If we see the percentage of stocks above 50 MA, the yellow line, Nasdaq 100 sharply coming down and already below the 20% level. If you notice, none of the other major indices are below the 20% level. So Nasdaq 100 is also weaker than the other major indices, just like Nasdaq Composite is weaker than NYSE, which we are seeing for many weeks. Now, in the tweet I mentioned, of all these 5 major indices, Russell 2000 is the only one which is still having higher low in the percentage of stocks above 50 MA. So if we at all thought of buying any stocks, the place to look for those stocks would be small caps, because market breadth is clearly showing that is the relatively stronger one. From the market ETFs and the market breadth, we see that market is bearish. We see also that Nasdaq is more bearish relatively. Nasdaq 100 is also more bearish relatively, and that may show that the mega caps are also bearish, gradually going to larger cap and larger cap. This is the mega cap custom index. In the market recap, when price came here, I mentioned that it came to the yellow direction line, recovered from far below the lower boundary, came to value area, and we would like to not buy at that point, already far above the swing low. Then it displayed the bearish flow again, came down. Mega cap index, custom index, is looking very similar to QQQ in the last few days, and that is not surprising. QQQ is majority tech stocks, mega caps are majority tech stocks, and QQQ is market cap weighted. Mega caps are clearly looking weak. Now let's see if we can find some other insight from market breadth, that is looking at sectors, industries, and stocks. 1 month to 1 day. 1 month view, the long term view is bearish. 5 day, 10 days mid-term view also bearish, but not as much as long-term view. And 1 day, 2 day short-term view is again bearish. So long-term bearish, then it improved a little bit, then it turned bearish again. Exactly same thing that I analyzed in the previous market recap also. This also shows that overall downtrend, market recovered little bit, tilted down, same as in last week, same conclusion. Preferred trading direction is bearish from this angle. If we look at the bucket analysis, I think in the previous recap I showed that it was mostly normal distribution. That is the same case here. Most of the stocks are in the middle of the buckets. There is not enough There are not enough stocks either in the lowest extreme or the uppermost extreme bucket, so we don't have any signal from there. The pie chart is showing that market is slightly bearish. So if you remember again, the percentage of stocks in the lowest bucket went to almost 60%, and at that time we could expect a recovery. The recovery happened, and then it barely became bullish in the pie chart and it tilted down. Actually, this is the exact same comment I made in the previous recap. So it was a recovery from oversold condition. Market didn't turn bullish. Preferred trading direction from this angle is also continuing to be bearish. Lastly, if we look at the technical breadth, look at the weekly picture first, balance between bearish and bullish signals. All signals overall more bearish. Strength signals bearish, reversal signals bearish. Trend continuation weekly interval is actually more bullish. However, Q systems is perfect in my view for swing trading. We have to decide for swing trading the directional bias using daily. Weekly provides an useful backdrop both on the candle charts as well as technical breadth. I can see in the weekly we have some reason to look for bullish stocks. Now that is in sync with what we saw in Q edge. It is important to notice things are in sync across different dimensions or not. In Q edge we saw the medium term view 5 days 10 days not so bearish as long term and short term, and that is probably being reflected here, that we have more trend continuation bullish signals than bearish signals in the weekly mid-term view. Short-term view, daily balance between bulls and bears as of Friday's close, very bearish. 82% of all signals bearish. Strength signals 87%, trend continuation 86, even reversal 66. It is very bearish. No doubt about that. One thing you will notice in the bar charts, whenever a category crosses 10% of the stocks in the universe, that is significant, and I can see more than 10%, 11.6% stocks in this universe, and this is liquid mid-price stocks. Nowadays I am running the finder scans for my own trading on mid-price stocks, and always I run on liquid stocks. So we have 11.6% bearish breakouts. Clearly a time to look for short trades. Also trend following 7.5%. Bearish trend following trade setups. We may look for bearish trades from there also. So from every dimension we see that the market is bearish. Certainly not a time to look for buy setups. Even if there is a stock that is giving buy setup, that will be buying against the market direction over long term, that will not work well. It's best to follow the market, and the market is currently bearish. We may look for bearish trades. Now I also released the latest version of Q Dives Edge Vital Finder, and I mentioned earlier, now we have this context sensitive help, tooltip help with the question mark, When it is black color, I can use the action buttons, like I moved from daily to weekly, no message was displayed. Weekly back to daily, no message is displayed. If I change it to green, then it will show me the tooltip but not execute the action. So again, I am clicking the same button, top left corner. It shows go to weekly tab. Shows the tooltip, Q help, but doesn't actually go. You change to green color when you are getting familiar with all the action buttons on any of the Q types programs. If you want to actually carry out the action with the help message, click the question mark again. It's a toggle button, changes to red. Now it will display the tooltip. I click the top left button again, go to weekly tab, click OK. It will actually go to weekly tab. Once you are comfortable with all the buttons, I think all of you are already used to using at least some of the buttons. After you go through the tooltips, you may be using the systems in few other workflows as well. But I am comfortable with all the action buttons, so I am going to switch the messaging off. The other change that I mentioned, and this is a good time to look at top-down analysis also using Q edge. I went to Q edge using the action button. Market is bearish. Let's go to the sectors. Now the sectors and industries scorecards are at the bottom, and stock scorecard also. Earlier we had sector and sector percentage tabs separate. Now I have combined them to improve the performance. And one reason I did that is when I added the tooltips, it is there in Q edge also, that put some extra load on the system. I don't like to make the system slower. So when I added something that put extra load on the system, I found another way to improve the performance. So overall performance actually improved, though I added functionality. Now sector and sector percentages, industry percentages are combined in the same tab. Let's do a top-down analysis. Let's look at the sectors. Sort by Friday's score. Financials and utilities are at the top. Now, are they really up? Relatively, they are the best performers, the top 20% shown by checkered background. But which one or ones are up, we can see that from this summary count at the top. One day performance, one sector up, 10 are down. So two best performing sectors are financials, utilities, but only one sector is up, that is financials. What percentage? We may scroll to the right, 0.26%. All the others are down, and some are down by quite a large percentage. I don't usually look at the percentages, I look at the relative strength. Why? Because I have a preferred directional bias and currently it is bearish. I don't need to know whether a sector is up or down. I am now going to drill down into the weakest sectors, and those will be down because market is down. So I don't need to actually look at the percentages. I know market is down, preferred direction is down. I just need to look at the weakest sectors. And let me choose the last four: healthcare, communication services. Actually not last four. When I look, the advantage of looking at this scorecard is that it shows the transition of strength weakness from 12-month to 1 day, and during market hours it shows in real time. So why I didn't want to look at all the bottom four sectors is because healthcare is weak for a very long time. If I'm looking too short, that is not the best candidate. Com services is also weak for quite a long time. The best shorting candidates will actually be, if we find them after 360 degrees analysis, in energy, because that was the strongest sector for a very long time. Now it is the weakest one. In fact, it is also the most decelerating. So I will like to short energy stocks, and next choice will be Infotech. Let's drill down into those two sectors industries. Again, I'm going to sort by Friday's performance. I'm usually interested in the bottom 20% of industries, which will be this many, or bottom 20% decelerating. So I selected those also using control click. Now let me drill down to the underlying stocks in S&P 1500. I could drill down to my liquid stock universe also. In this case, I drill down to S&P 1500 stocks. That's what I mentioned earlier. Once you get familiar with different action buttons, you know how Edge, Vital are integrated, you may have different workflows. So these are the scorecards of all the stocks in the weakest industries, in the weakest sectors, and I'm going to look for stocks that are down on Friday. So I click this minus button. I am left with, let's look at it in detail. I'm left with 117 stocks, weakest sector, weakest industry, and these are all down on Friday. And because I selected down on Friday, 0% are up, 100% are down, 117 stocks. So what I'm going to do, I'm going to look up their technical trading signals and setups using Finder. Using the action button, single click, and it brings me to Q Finder. And I'm going to use the setup button here to focus only on the stocks that have some kind of short setup. And I'm left with 11 stocks. Left with 11 stocks, 7 of them have breakout, 5 bearish flow trend following, setup, no pullback, no headwind, no box, no bounce. Any name with capital letter, those are trade setups, and not full capital, those are trade signals or Q signals. Gap can also be a trade setup for intraday trading. We have 6 gap downs also. Now remember earlier when I looked at the overall technical breadth, I noticed I'm so used to reading these plots, and you will also be used to once you look at them. Not there. I noticed that large percentage of breakouts. I mentioned anything above 10% is very significant. So it makes sense to look for breakout trades. And when I then carried out a workflow from a different angle, not a technical first workflow, but I did top down starting with market view, bearish, then sectors, weakest sectors, but not the ones that were weak for a long time. Drill down to the industries, chose the industries that are weakest or most decelerating, then looked at stocks that are down on Friday, then looked at their trade setups, and I came to several stocks, 7 exactly, which are having possible breakdown short setup. Some of them have gap down open, some of them have bearish flow. Let's look at these 7 stocks on technical charts. We could do that, or we could see out of these 7 stocks which ones are fundamentally weak enough to short. That is what again I meant by using different workflows once you are comfortable with all the action buttons. Let's look at the technical charts. The 7 stocks are opened using the default daily chart template. Let us go through these stocks. The first stock, MIME, the name is displayed in MetaStock at the top. with some more information like closing price and change on the last day. It's a daily chart, so it's last day, otherwise last bar change. So MIME, it is flat, maybe a buyout candidate. So the trade signals or setups are not meaningful. Let's ignore this stock. I'm clicking the top right X button to close this smart chart. Next one, CDK. Again, I'm reading the name from the top. It has a breakdown below one trend line support. That's why QFinder flagged it, but it has another trend line support nearby. So I'm not going to short it. Close this. PBF energy. It's an energy stock. Interesting. So why interesting? I want to short at the most lucrative point. And energy was the strongest sector for very long, and just now it is weakening very sharply, actually, the most decelerating sector also. So this stock would be a good shorting candidate if it can break below trendline support next week, and we could use fine-tune chart to have extremely low risk short trade in the stock. We'll check the fundamentals also, but this is one that may give a lucrative shorting opportunity, not using daily, because daily has already come down somewhat from the swing high. I will not use the daily chart to short, but I could use intraday chart to short, provided it breaks below the trendline support. Interestingly, it displayed the bearish headwind at this top. In fact, it displayed the bearish headwind here also. Those led to price drops. Even more interestingly, or equally more interestingly, here the bullish headwind also caught the very bottom. And now at the right edge, price tried to go above the watermark created by the bearish headwind, then dropped below the same watermark, creating a false upside breakout. That is also a bearish signal. Only reason I wouldn't short on Friday would be this trendline support. Let's close it. Next stock, SLB, Slumberger. Also energy stock, and interestingly, we find a similar pattern. Bearish headwind at the very top, didn't drop, moved sideways, trendline supports were still there, tried to go above the watermark created by the bearish headwind, came back below that again, below that watermark, creating a false upside breakout at bearish headwind level. On Friday, we have a bearish color candle. However, there is another trendline support nearby. So again, using daily, I will not short. Using intraday fine-tune chart, I will not mind shorting it next week, because then the risk will be small, narrow enough that I can book profit by the time price comes to this trend line support, provided the intraday charts give such a setup next week. SLP is near very high price level, just like the previous stock. That was expected because energy sector was very strong. At minimum, you may book profit in long positions in similar stocks in energy sector. Book profit, or at least protect profit using trailing stop. Using Q technique systems, you are also able to protect your profit very well. You will not hold a stock in energy sector at this time, especially if these trend line supports are broken. Let's look at the next stock, ACIW. This is a breakout candidate using daily chart as well. On Thursday, it gave a bearish flow. However, it was moving sideways till Thursday inside a range created by trendline resistance support. We wouldn't short on Thursday's close. On Friday, it broke below the trendline support. So that is giving a breakdown short setup. We may look at it using weekly, daily. Let's see if we have any other stock left. PDCE. Again, I'm reading the name from the top. Ticker and name PDC Energy. Again, an energy sector stock, and this is giving a breakdown setup just like ACIW I saw earlier. This is giving a possible short setup using daily chart as well. Again, same pattern, bearish headwind, price tried to go above that, came down below the watermark created by the bearish headwind, creating a false upside breakout. It was inside a triangle created by trendline resistance and support. Only on Friday it crossed below the trendline support. The next support is far enough away to take a shot on Friday itself. Q techniques allow us to take a short trade in such a cases at the close or near the close. So Friday itself I could close it, but I will like to look at it using weekly daily also. Let's see any more stock is there. SM Energy. SM is the ticker symbol, also energy sector stock. However, it has not broken below the next trend line support. It broke below this trend line support. That's why it was flagged as a breakout candidate, but another support is nearby, not going to short it. Let's close it. So we are left with ACIW and PDCE. Let's look at ACIW first using weekly daily template. Great. The weekly is showing even more reason to short. Trendline resistance, lots of candles with long upper tail showing that bears were not letting price go up. Then bearish shape, bearish backdrop, very beautiful bearish closing on Friday, breakdown below trendline support. Enough reason to consider shorting on Friday. This is the time we'll look at its fundamentals. So you already know weak sector, weak industry, weak technicals. Let's look at its fundamentals. ACIW. I know the suffix already, so I type the suffix .o. .o is usually for ordinaries, ordinary shares. We are looking at the scorecard. I'll not like to short based on valuation, but we are able to trade in Q techniques either using valuation or earnings growth. Earnings growth is negative, that allows us to short. Also, as I mentioned, for shorting, I am a bit more flexible on fundamentals. And we have negative earnings, not very large negative earnings, but it is in a very weak industry, weak sector, so I'm able to short it and the risk is small. Let's go back to the last stock, close ACIW, that is giving a possible short setup. Left with PDCE, energy sector stock, also breakdown. In weekly, after this drop, backdrop color turned bullish, then it displayed bearish indecision, bear release. Last week, along with bear release, the color and shape both turned indecisive. This is the first week after this recovery that backdrop color and shape both are bearish. And we have a possible breakdown short setup in PDCE. Let's look at its fundamentals now. By the way, for ACIW, we know industry was relatively weak, and now we can see for ACIW that we analyzed just now, relative score of the industry is weak, and in itself also industry was very weak. And PDCE, After analyzing this stock, there will probably be many other shorting candidates, but I will not look at them. Instead, I will point to some of the Metastock 18 features. PDCE, energy sector stock, oil and gas exploration production, energy sector. Valuation middle, medium valuation, yellow. Earnings growth is positive, but sharply decelerating. We can see that from the earnings growth year over year quarterly earnings growth plot also sharply tilting down. That allows us to short. Once the earnings starts to reduce, even if it is positive, we are allowed to short. And in any case, for a stock at a very high price level, I am flexible on the fundamentals. In itself, 79% of the industry peers were down Friday. So we are able to short these two stocks, PDCE and ACIW. I'm sure there will be other shorting candidates as well. You could carry out the same exercise on Thursday. Let's look back at SPY. Though I am analyzing it after Friday's close, if we look at SPY, the best time to carry out the same analysis and short would be Thursday, when the flow color turned bearish, and also on this day. In fact, we would be ready from the previous day's very long upper tail candle, and we could short on this day and again on this day, not necessarily SPY, but individual stocks using the exact same workflow or a variation of the workflow I carried out just now. Now let's look at Metastock charts. Let's close everything. Let's open Apple. Now, at the right corner, we have the y-axis. At the bottom, we have x-axis. Now, when I open the chart, you can see it is very beautifully spaced, the candles. That is easy to read. That is because I am loading the number of, not loading, I am displaying the number of days that fits this screen width. And where is that coming from? When we go to Power Console, I compressed some of the options, and it's important to go through these options. Let me spend some more time. Market recap is over. Market is bearish. Thursday would be the better day to short. Friday, you could still find some shorting candidates. Not a time to buy. Now let's look at some of the Metastock features in 18 version. The number of records to display. This is important. When you are receiving the Q global templates, then I am setting it to something that fits my screen width. And I'm traveling, it is fitting my laptop screen width, not the desktop screen I have at home. So you may change that. It will look better if you change this number in a way that the candles are spaced properly for your screen. This is the number of records to display and how many numbers to load. That is here. For Q Global, suggested is 600. No need to load maximum, certainly no need. Default is 1000 something. Again, it's not easy to remember again what is the default. So I have set it to 600 for all the ready-made Q templates. So it is loading 600 days of data but displaying 150. And we are opening using Smart Chart, which will open using the default template, which is the Q default template, the daily template. Now this is a single chart template. It's important to go through these few things. Single chart template. If I am looking at a stock using weekly, daily at a glance, that is a dual chart template. How many records are best displayed on these charts. That will be about 75, isn't it? 150 is good fitting for single chart for this monitor. So if we have two charts, it will be 75. And I'm now double clicking on the x-axis at the bottom, where this you can see the months here. I'll draw here. I'm double clicking here or here. And if I double click, you will see it shows for the charts again how many records are displayed. And you will see I carefully made it half of the single screen template. That's why the candles are very nicely spaced out in both single chart template and multi-chart template. Once again, when you have the templates on your computer, you will set it to different numbers of displayed records based on your screen width. And once you do that, let's say I have changed it to 75, that is the best fit, you will save it as a template and give the same template name, Q at a glance weekly daily, but you will save it once after changing the display records to whatever suits your monitor size. It's important to open the charts properly in that way. The other thing is at the bottom here, let me change the color to white. You can see it is showing a scroll bar, then brighter color portion, which is actually the display width. And then on the left is the rest of the data loaded. So just by looking at this histogram-like pattern at the bottom, you may see this more clearly on your own monitor. You can have an idea how the price moved across all these periods. And you can see it was going up, 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 up until this time, which is here for Nasdaq ETF QQQ, and now it is starting to roll over. But looking back, it was going up, up, up for a long time. So this histogram at the bottom allows us to see not only on the display area but much beyond that based on how much data we are loading. And here I loaded 600 bars for the charts. So 600 weeks, that's long period. It was going up all the way. Now, if I wanted to expand or collapse, I could drag and move this vertical scroll bar. You can see what is happening. If I drag it to the left, more and more data is being displayed. If I drag it to the right, less and less data is being displayed. If I wanted to set it to 75, 75, okay. Okay. Another thing is, you see this highlighted area, that is a good fit for my monitor size when dual chart monitor template is used. Now, if I wanted to center, let's say around this point, center around this point. So all you need to do in the bottom scroll bar here, I'm clicking here, let me point, I'm clicking here on the scroll area, you see the histogram, just click anywhere, you will see this bright histogram now shifted and centered on the exact point where I clicked. I show it on the daily. So I know this is the peak of the price move in QQQ. And I want to see to the left and right, how did it do? So I am clicking at the bottom histogram pattern scroll bar, they are calling it scroll bar. Click here, you will see this bright area is centered there. Exactly wherever I click, bright area will center. And if I want to go back to the end of the chart, just click here. So I'm clicking there, it's going back. So this scroll bar scrolling feature is also useful. Let me do the same to the weekly, scroll to the right edge, and earlier options of control plus, control minus keyboard hotkeys will also work. If you put your cursor to the right edge, okay, let me show. I am putting my cursor here or here, and if you have a mouse wheel, you can press Control wheel up or Control wheel down. Now notice my cursor was here when I pressed Control wheel up down. If my cursor is instead here and then I use Control wheel up wheel down, see what happens. See, it's expanding or contracting, centering the area where my cursor is. That's, I think, great usability feature. Once we know, these are not probably all documented, I tried and observed that depending on where your cursor is positioned, when you use Control wheel up wheel down, it expands contracts accordingly. So if I'm somewhere here, Control wheel up starts to expand, centering that area. Sometimes when I want to see more expanded version, I prefer to keep the end of the chart within my display view. So I will have to move my cursor here at the edge and then press Control wheel up to expand. I don't want the last few days to go off the screen. Those are few tips and tricks. Another thing I like, this trend line. I have that in the custom menu bar. Trend line is now also a measuring tool, a beautiful measuring tool. So I clicked it. Let's say from the top to Friday's close. You can see it shows using the label. It's a drop in QQQ of 16.44% in 12 periods. If we want to know from this peak in daily, from this peak in daily to Friday's close, it is 6.82% drop in 6 days. So that's a nice way to quickly measure. I don't draw trend lines because Q Systems has very robust trend lines, but when I want to know the percentage drop and how many days it took to drop or go up, I can use the trend line as a measuring tool. Another very nice usability feature is related to how error messages are displayed. In 17.5 up to 17.5 in Metastock, the error messages kept on coming and we had to click it okay many times. That was especially annoying during webinars like this one. And they have done a great job. Now error messages are all grouped together and displayed at the bottom right corner. But usually I don't even look at the error messages. By looking at the chart, I know that it is because not enough data is coming or because I typed the symbol wrongly. So let's type a random symbol. There is no symbol like this what I am typing. Press enter. Now you will notice that it is showing the error alert, but I don't actually need to look at the error alert. I know that the symbol was not valid. And by the way, the measured trend lines are still showing. That is as before because of the chart options. When I change the chart, let's try to now open, let's see, Netflix. When I type the symbols and Netflix is a valid symbol, under options I have selected the option keep line studies. That's why the trend lines were kept. If I remove line studies, the trend lines will be removed, but these labels will also go away. The labels are more useful in webinars. If you are using Q Systems for a while, you really don't need the labels. So it's safe for such cases to remove the line studies. But I like to keep the labels because I also post on the forum. It's useful for people who don't have Q system yet. So if I wanted to just delete the trend lines, measuring tools in this case, but not the labels. You may go to edit, delete all, or press alt delete, and it will ask what to delete. You may say not indicators, line studies, not text. Text will remove the backdrop, weekly, entry, daily label. So I'm just removing the line studies that I drew manually on this chart and also on this chart. That's how, if you wanted to remove measuring tools, you will remove them. Now let's go back to Netflix. Now you see all the indicators are back. Last time until 17.5, it used to show the error messages, then we had to choose keep the indicators or not, and this is a great usability improvement. So this I showed for invalid symbol. Let me show another case, a new IPO. One of the most hyped recent IPOs in India, Paytm. They have a mobile payment application. One of the most hyped recent IPOs, and you see it doesn't have enough data. In the last version, it used to display many messages one after another, but now all of them are clubbed into this alert box. I'm not going to click the alert because I know that's because not enough data is there. And just for the sake, you see from the top to the Friday's close, in 13 weeks, it dropped by 57%. I dragged it from top to bottom. Let's click on the line and delete it. Let me drag it from bottom to top. See that to recover what percentage it has to gain. So it dropped by 50 plus something percentage, and to recover to the same price, it has to go up by 134 percentage. That's one reason I don't trade IPOs. There is not enough data to do full Q analysis, neither in terms of fundamentals nor in terms of technicals. I will rather buy a stock like Paytm now if they can go up and if the fundamentals start to show some signs of strength. Anyway, I wanted to show this measuring tool and also this very useful fact that error messages don't keep on popping up. Let's now go to, I will not go through all Metastock 18 enhancements. You may watch Metastock video, but the ones that I find useful for Q systems. For Explorer, the favorites are now in a separate tab instead of on top of one another in the same tab. So that's fine. We have the Q systems favorites. Usually I'm just running Finder, and if you are having the momentum signals like me, usually we are just running Finder and Finder 2. But some traders I know, they don't want to trade all the setups. Some of them, I know one trader, he likes to buy only stocks below lower boundary. And now there is a search feature here. If I want to know what are the favorite, I am now searching under favorites tab, all the scans with name boundary, and I can see these are the two, beyond lower boundary, beyond upper boundary. Very easy to find. If I wanted to know based on activity or volume, what are the scans? We have Q activity increasing, Q activity unusual heavy. So you may, if you are using individual scans, and why you may use individual scans is probably because you are only interested in certain kinds of trades. I trade all the Q trade setups, so usually I just run the finders. I do not go through all the different setups. That's a choice of the trader. So this scan search is also useful, and performance has improved a lot. for explorers and also for displaying charts in real time. In fact, nowadays during market hours, I can keep the 4 market ETFs running on Metastock very smoothly. It runs, no issue at all, full real-time mode. Earlier, I used to use my brokerage platform, TradeStation, for that, for keeping an eye on the market ETFs. I may still use TradeStation because I have multiple monitors like all of you. TradeStation allows to link multiple monitors, but for markets where TradeStation not available, like India market, China market, all the global markets, Metastock, real-time displaying of multiple charts, and while displaying, you may analyze other stocks at the same time. There is no issue at all. Up to 17.5, full real-time opening so many charts was an issue sometimes, but they have done a great job with the charting engine. They say it's a major upgrade of charting engine, and I totally agree. Those are few of the, okay, by the way, at the bottom, they have done great work, I must say, in terms of usability. The custom periods, you can see IM 10. So intraday minutes 10. So you can read the intervals very easily from here. You can also use custom periods like 3-day. If I use 3-day period, you can see that label changes to D3. From the label, we know what period it is. It's improvement from previous version. I'll not go through all the changes, but I'm loving it. Great enhancement. I have already ported all the Q systems, Q global momentum signals, and market breadths to this latest version, and great upgrade for Metastock. Well, I'm little bit beyond 1 hour because I went through some of the Metastock stuff. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. Next public session will be next weekend. And in between, if my internet is working while I'm traveling, I will carry out the next master class on market breadth. That will be a long session, 2 hours plus. Let me see when I can schedule that. I look forward to seeing you in there also if you are attending the master classes. Have a great weekend. And as these analyses show week after week, there is no reason not to do that. Trade profitably. Thank you.